Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is a show which gets you a complete wrap of all the stocks that are buzzing in trade. I am Darshan Mehta. Let's welcome our experts on the show then. Kalra of Target Investing, Chokkalingam of Equinomics Research, and Sharmila Joshi of, she's an independent investment advisor. She joins us on the show. Thank you to all our guests for being on the show. Today on Hot Money, we'll discuss stocks like the PSU banks, what should be done on the case of the PSU banks. We'll speak about stocks like VIP Industries, LIC Housing, as well as DLF. So let's start with the first stock, and that is the sector as such, the PSU banking space. It's been all over the place. Yesterday was up almost 5%. So we're asking, is the worst over for PSU banking stocks? And if someone wants to take an investment view, which is the best stock that they should pick up from this pack? So Chokkalingam, your strategy on this, you have a minute.
Yeah, it is the best time to pick up, but not the entire sector. Okay. Because there is a clear polarization within the PSU segment, banking segment. You have one set of stocks like IOB. You know, the net worth is half of outstanding net NPA. So where the people have lost the confidence in the bank, deposits are not growing, credit is degrowing. So clearly, the other segment is the one the investor should focus. That is the PSU banks which have got a net NPA of less than 4-5%. And net worth is substantially more than the outstanding net NPA. Okay. And the credit is still growing. So if you use this parameter, there are a couple of good quality banks. I believe in those banks, one can make phenomenal wealth in the next 1 year. Okay, so we'll get to those banks in a while. But Sharmila, your opening statement, should someone buy PSU banks? And if yes, which one?
You know, when you introduced it, you said that the case of PSU banks, you know, that reminds me of all the murder and, you know, adventure stories you used to read as a child. And that's exactly how this whole thing is playing out in PSU banks, where every day some new thing hits you from somewhere. And first you had that whole PNB issue, and then, you know, almost on a daily basis you hear of some or the other bank reporting some NPAs. So I don't think the troubles are over, you know. So that I think this is a clear no for me. Simply because I think as a sector I have sort of, you know, I have a lot of doubts about what is happening there. And I think secondly, you know, we all started out with the hope that this NCLT would see some resolution of issues. We haven't seen anything getting resolved yet. We have new scams hitting you everywhere. And I think the most disturbing thing really for me of this whole thing has been that, you know, earlier you thought that the NPAs with banks are largely restricted to, you know, the core sector issues. Now, you know, you're really expanding the boundaries literally on that. And for me, that's not a very comforting thing. So maybe there could be some banks, but as a sector,
time is up. I'll get back to you. But Samir, what's your view?
So I don't think so right now is the time, because Q4 results are to be announced in, I think, 2 weeks or 3 weeks total. Now this results will have 3 impacts. One will be the bond losses. Second will be the provisionings of the NCLT cases. And third, the new NPA norms provisioning. So all these 3 impacts are negative. I don't see any positive which will surprise everyone, and, you know, the rally will go into an investment rally and come out. So I think let's wait for the Q4 to kick in and then see.
Okay, so I think the consensus view is no to the sector as such, but we'll open it up for discussion. So Mr. Chokkalingam, you said there are certain select pockets in the PSU banking space you like. So which are these stocks and why?
I prefer Indian Bank, followed by Vijaya Bank, but the first choice is Indian Bank. Okay. If you look at a net NPA point, it is just 3.3%. Okay. Price to adjusted book value is just 1.4 times. This is the cheapest PSU bank. You know, some of the PSU banks are trading at even 8 to 10 times price to adjusted book value, whereas this is available at 1.4. And very interestingly, this has grown the credit over in the last 3 quarters, according to the management, at 16%, when the industry itself is growing only around 11%. And if you look at some of the segments like retail, MSME, they are growing at 27 to 38% year on year. So this is a phenomenal stock for wealth creation. I may be wrong, but that is my firm conviction. Because in value investing, you should always look at ideas, you know, when the whole investing community is very panic. You know, you have to look for a great value stock, and that is a way to make money. Okay. So I believe this can.
And what's the story in Vijaya Bank?
More or less similar. In terms of the price to adjusted book value, net NPA, credit growth, it closely follows Indian Bank.
Okay. So Indian Bank and Vijaya Bank are the two stocks that Mr. Chokkalingam is saying. But Samir, I think you spoke about how Q4 will pan out. But if you read all the previews that have happened, and it's a general knowledge that because of all this, most of the PSU banks will report losses. So that is known. So they will come out with. So at this price, is it not an opportunity to accumulate if someone is looking to invest for a longer time?
See, there's no question that the loss or profit. It's not the question of that. I think it's more of question of what people are estimating as losses. Will it be more than that? Right now, the trend of results is always, if the analyst community expects X and it comes even a 5% more than X, the impact is really big on the till the next quarter results on the stock. So I think there'll be more surprises on the downside, because the NPA provisions will disclose something which hasn't been disclosed in Q3. So, and the bulk will come into Q4, because after that this will be real-time NPA recognition. Okay. So I think that will change the dynamics.
Okay. Anything in the private sector banks that you like?
So I like IndusInd, I like HDFC Bank still. IndusInd on two things, because they'll merge with BharatFin. And this will give them a huge boost on the retail reach. So that will really boost their retail reach and the CV growth loan book as well. So I'm very optimistic on IndusInd. HDFC, because of its consistency and the performance on the long horizon.
HDFC Bank, you mean?
Yeah, HDFC Bank.
Okay. And Sharmila, do you like anything in the private sector bank if you don't prefer the PSU? Is there something that looks attractive that someone should look in the private sector? Because that also has its own set of troubles. They have their own problem child.
Join the party.
Yeah. So.
Yeah, completely. I think still it probably makes, to my mind, more sense to buy private banks, because, they did correct along with the PSU banking space. And I completely agree with the point that you should buy a sector which is sort of facing, which has a lot of headwinds, because, that's the time when you sort of make more money. And I completely agree again on Indian Bank, because I think, that has been sort of the shining beacon. But I think, yes, overall, I prefer private banking and NBFCs as a space to PSUs.
Okay, so I think that's the view. We've got a complete view on the PSU banking space. So it's a clear avoid as a sector. It's a clear avoid. There are much more skeletons that could probably come out in the fourth quarter. But Mr. Chokkalingam likes Indian Bank and Vijaya Bank out of the entire space. Even Sharmila agrees on Indian Bank. While Samir will stay away from the PSU banking space, he would go in for an IndusInd Bank or an HDFC Bank among the private banking space. Let's move on to the next stock, and that is VIP Industries. The counter was up almost 18% in trade yesterday. Let's see what it is doing now. It's managed to cool off a little bit, but there seems to be a rally. So what we are asking is, will the rally continue in VIP Industries? Should this counter be accumulated? It's up almost 70% over the past 12 months. Samir, your opening statement on VIP, will you accumulate?
So I think the rally, so I don't hold VIP, but I think the rally will continue, because a lot of people take it as a proxy to the aviation sector and the, the travel growth which is coming through India. So it's the safest bet. It's debt-free system. The only problem out here is they used to have a 16% kind of a margin. Now they have two ways, the hard luggage and the soft luggage. The soft luggage is imported from China, which is a higher margin overall. But the hard luggage is the more higher growth product for right now, which is at a lower margin, because they manufacture itself in India. So I think that kind of, if the margins and the result continue this way, I think people will be more optimistic and try to use it as a proxy to the aviation sector. So the rally should stay on.
Okay. What about you, Sharmila? Will the rally continue? Will you accumulate VIP Industries?
So I recommended this stock when it was closer to 100 rupees. Okay. So from my perspective, it's done what I expected it to do, when it was 100, because precisely all these points, you thought that it would, as a sector, it would have good growth, whatever, the hard luggage, soft luggage mix. Then, at that time, there used to also be that issue with canteen sales, because they did a lot of that, and that had sort of become a worry. So it's sort of rallied with the rest of the mid-cap space over the last couple of years. So I think that now all the positives are in the price. So I don't really expect this rally to continue. It's a stock I like, but I think now it needs to consolidate at this level. Okay, consolidate. What about you, Mr. Chokkalingam?
Yeah, certainly I will not buy. It has already moved up by 100%. If you look at FY 2017, revenue has grown just at 5%. In the FY 18, 9 months, the revenue has grown at around just 8%. So the growth has come only in the profit. That has to do with the cost minimization. But there also the company will have problem because oil prices shot up from the bottom more than 130% in the last 2 years. So definitely it will pinch all these companies which are using derivative of crude oil as an input. So I would agree with him. Airline story is a big story, consistently growing around 20%. So I would suggest directly play on something like a Jet Airways rather than indirectly playing on VIP, which is quoting over 40 PE. On FY18 EPS.
Okay, so I think the view that we are getting in on VIP Industries, and we'll open it up for discussion. So Samir believes that the rally can continue, but the other two guests don't think that is there. So Samir, this concern on rising crude prices in terms of higher raw material costs, is that something that could impact, and what's your view on the valuation? Is it expensive for a stock like VIP?
See, it's expensive to buy right now, but it's not expensive if you have a lower level of purchasing price. Because see, even if the crude price increases, now the soft luggage has no relation with the crude price. So we are optimistic that the crude price will go 80, 85. So that will impact the 30% of the hard luggage which they are making over here, which is using the polymer product. So I think the margins can still sustain, and it happens with 2-quarter lag. So even if the crude prices hits on today 80, the aviation will hit up today itself, and VIP will still hold on for a couple of quarters to show that impact. So I think the rally, if the continuing profit expansion is there and the margin expansion is there, I think it will grow up. Just to give a number, in 2016 the import of their one of the luggage was around $31 and that selling price was around 4,000 rupees. So that's like almost a 2x kind of play. But due to the expenses, that adds on to the margin. That's why it was 16%. So I think the margin will expand further. And even if the crude hits, it hits the 30% of the portfolio.
Okay, and what about currency risk? Does VIP have a significant? Because it imports a lot. So
it imports a lot. So, and in a certain way, that is hedged by them on the shorter terms. And even if there's any kind, so when I'm saying 16%, that was on a dollar around 66. So that was at 16%. So the only problem right now is coming on the hard case, which is selling more, and they have a lower margin on that. So the softer case, when that expands, and that will slowly expand, that will come into more play. And
but what's the difference between margins between a hard luggage and soft luggage?
So hard luggage is around 8 to 9%, and soft is around 12 to 13%.
Okay, so they need to grow that.
Yeah.
Sharmila, what you said the counter has run up, but they've also been showing a lot of results. So what does that not still fit in, or you believe that valuations have become too expensive for VIP? Because people buy it for, is it a long term? What I'm asking is, when you recommended it at 100, there were certain assumptions and it played out. So now it is trading at a much higher level, but the growth numbers have also come in. So is it not something that someone should look at a slightly longer term perspective?
Yes, you can, but that's exactly it. I think it's going to spend some time here. So maybe the rally will continue, but it will take time. And I think just as I think the negatives took a long time for them to play out on VIP, for the tide to turn and people to take interest in the stock, and now they've done that. So I think people are now invested. So I think that for me now the valuations are definitely a concern. And I think the results, etc., are all great. But I think it is going to spend some time in this, 350, 380 kind of range before it makes the next up move. And if it, you really start reporting those kind of numbers to justify a higher price. So I just think that for now the rally is done.
Okay, and a quick word, Mr. Chokkalingam, you said valuations were expensive. What would be a decent valuation if someone is looking to enter VIP, and will they be able to grow at that pace to maintain such valuations?
Not beyond 25 to 30 PE, because when it is growing in a single digit, that to poor single digit, the revenue, why should I pay 40 PE?
Okay.
And also, if you look at the the floating stock, if you net out the promoter, institutional and big investors, the floating stock is very small.
Okay.
So I have done an analysis where floating stock is very small. The perception-driven P is very high.
Okay.
So that itself is a big risk.
Okay, so that's a valid point. So I think the view on VIP industry, Samir does believe that Probably there could be more momentum, but the other two guests do believe that it's expensive and probably will not move much higher than this level. The next stock that we want to speak about is LIC Housing Finance. Did manage to rally significantly in trade yesterday. Let's see what it's doing now. It's down almost 1%. Yesterday, the entire market, including the housing finance companies, did well. So we are asking our guest, what should they do with LIC Housing Finance? It's been an underperformer. It's down 10% in the last 12 months and 25% down in the last 9 months. Would you accumulate LIC Housing Finance?
Oh yes, I think that when we were talking of banks earlier, I think that when I said look outside the space, I think this could be one of the stocks because as you said, the stock did correct, and I think even maybe 2 or 3 weeks back we were getting it closer to, or I think lower than 500 levels. So I think that's a very decent price to have gotten, and I think that's from where the stock has rallied. So I think people are now beginning to take interest in this story. Results here were good, and I'm overall positive on the sector in the sense that I think that affordable housing is a positive story that will play out. Now that all these concerns for GST and are in, as well as RERA is now becoming a reality. So I think that now as you go forward, affordable housing as a story will pick up, and there LIC Housing has a fairly good presence. And it's a fairly, in terms of balance sheet, etc., it's a pretty solid player in that space. So I think that this rally can continue.
Okay, this can continue. Mr. Chokkalingam, you agree? What's your view?
Yeah, definitely agree. It can continue. Not like a private housing finance company's mega rally, but steady and stable rally can continue because it trades only at around 2.4 times price to book value for the FY 18. So there is a lot of scope.
Okay. So two of our guests do believe there is more growth that would come in. And Samir, what's your view?
So I don't think so LIC Housing as in housing finance is a good place to be in, because see, the anticipation of affordable housing is already kicked into the valuations. Now the second part is, if the affordable housing picks up as their loan book, the margins thin out because it's more subsidized, it's more competitive, so you feel a lot of pressure on that, and the asset which is securitized doesn't see a very high value changes in the system, and you need to have more volume to have more value, and it's a very different competitive nature of the system, where I think a lot of people will give out huge margin losses to a certain place to gain that market share. So I don't want to be in that case.
Okay, so we'll open it up for discussion. Samir does not believe. Mr. Chokkalingam, I'll come to you. Do you think the concerns that Samir pointed out are valid? Because he believes that the affordable cycle, which is already put into the valuations at this point of time, and because of the value and going into affordable housing finance on a large scale, margin squeeze will obviously come in because of competition also. So what are your responses?
Yes, certainly there will be margin squeeze because according to the industry sources, more than 50 people are planning to enter the affordable housing. But as far as the demand is concerned, there is no dearth of demand. It's only the tip of the iceberg now. Considering the size, middle class, it's a huge opportunity. And LIC is better placed because its cost as compared to other housing finance companies is relatively cheaper, and it has got a brand name. Well established, and most importantly, the cheapest to stock. Some of the housing finance companies are even now, after the crash, they are trading at even 8 times, 10 times of book value, and this is available just at 2.4 times. So there is no risk at all, on downside.
Okay, risk reward is favorable. What would your pecking order be in the housing finance space? Which is LIC the preferred choice, or is there something else that you like, which is better?
In fact, I am not buying any of the housing finance, but my view is that this is a better place because I focus more on Indian Bank, Vijaya Bank, some of the old private sector banks. I find that they can give me much bigger alpha than the housing finance companies. Okay,
so that's the view. Risk reward, at least in the housing finance space, is something that is favorable according to Mr. Chokkalingam. Sharmila, would you agree that?
Just add to that, in terms of demand, I think that what we are also seeing play out is that if you look at the auto demand, for instance, it's a clear indicator that it's all the sort of tier 2 towns where you're seeing a lot of buying for autos, and I think even the demand for affordable housing is going to come from outside the larger metros. So you also have to look at a housing finance play that is sort of positioned to take advantage of the tier 2 play, and I think definitely LIC Housing Finance is one of those. So I don't really see too much of a concern on the demand front. Yes, I think there could be a pressure on margins, but in terms of whether it is the market that they're addressing or the product offering that they have, I think LIC Housing Finance is there. And as we've been discussing, I think the valuations are okay.
What's your pecking order then on the housing finance?
Actually,
market?
in housing finance, this is the only company that I am recommending.
Okay, nothing on the private side, not HDFC, nor India Bulls.
No.
At this point of time, you like this one. And Samir, do you have a pecking order in housing finance companies?
So I don't have a particular pecking order, but if you see Canfin Homes, that got really thrashed. Canfin Homes. That got really thrashed of moving out of the the sale process. The book is nice, but the only worry which I have is two-ended. One is the rate cut cycle is over. That 90% is over. Now either will pause or the rate hike will start up. So over there, the margin pressure, what people are imagining today, will be very different when the rate hike cycle comes into play. Okay. Second, the housing, affordable housing units, there's already a very large number of unsold inventory sitting at a lot of cities. So I don't see that demand coming in even during a rate hike cycle. Forget about the rate cut cycle. So I'm a little pessimistic on the whole sector as such.
Okay, is that a concern that affordable housing is not seeing inventory build, seeing an inventory build up, sales are not happening? So how, if that is not happening, how will it benefit companies?
No, I don't agree with that. In fact, a couple of days back, one of the rating agencies has come out with the figure of affordable housing growth. It shows a strong double-digit growth. I agree there is a lot of inventory. It's at a middle and a high end. But like if you look at the SOBA developers, the inventory is, if my memory is right, at least 200% of the annual sales. Okay. So it is there in the middle, mid-sized and high end, but certainly not to that extent in the affordable sector.
Okay, so that's the view on the housing finance space. LIC Housing Finance, two of our guests believe that the risk-reward ratio is favorable. Samir at this point of time does not like LIC Housing Finance. And the final stock is DLF. The counter managed to rally. The real estate sector has been doing extremely well. Today it's down almost 1.4%. But is this the best play in the real estate sector? It's up 30% in the last 12 months. Samir, I'll start with you. DLF, what's your view? Will you buy?
No, not right now, because see, the momentum came through the commercial assets being monetized through deals with GIC on DLF and BlackRock on the India Bulls. Now, being said, commercial side is positive to the system, but residential, I see a lot of negativity coming into play. And DLF, if you see the latest Supreme Court order on their Manasa land, that was really negative for DLF Green project, and that will have an impact on their books. So I am a little negative on the sector as well.
Okay, what about you, Sharmila? DLF, what's your view?
Oh, it's not a stock I like, and traditionally I've never really recommended real estate direct plays. So I've always chosen to go the proxy way and look at stocks like an LIC Housing Finance or some of the paint companies, etc. Again, I think if you look at DLF specifically, last quarter numbers not too good, some leverage issues, some corporate governance issues keep cropping up. So even within that space, I think I think some of these south-based companies, like I just saw SOBA results today, which were I thought very good. So I think those kind of companies would probably be better even if you want a direct real estate play than buying into a DLF.
Okay, so two no's. What about you? Would you buy a DLF?
Oh, I have not bought, I have not recommended, but somebody holding it, they can definitely hold. Somebody wants to buy for long term, they can buy, because if you look at the Cyber City valuation and still about 60% stake held by DLF, that gives you a lot of comfort and confidence. Okay. And the kind of land bank they have under lease model, it's enormous. It will take time to play out. It might take even 1 to 2 years, but if somebody has a 2-year view, I think this is a very appealing.
Okay, so I think the view on DLF is that two of our guests will avoid DLF, while Mr. Chokkalingam is saying that if you have a 2-year hold view or you are holding the stock, then you can continue to hold it. Valuations, are you happy with it? Because it's not a cheap stock by any chance.
Yeah, I agree with you, but if you look at the price to book value, it's about 1.6 times. Most peers are trading at anywhere from 2 to 2.5 times. Okay. So after the crash, the valuation concern is not there.
Okay, valuation concern not there. Is there any reason you don't like real estate stocks, or is there some specific only DLF that you don't?
I think, it's just very difficult to actually get a hang on what is happening with a lot of these companies. At what price have they bought their land banks, the development costs, etc., etc. And, the whole thing is so murky. Some of these deals, you don't know how they are structured. So ours is not a transparent market like the way you have in the West, where, things are nicely classified, A, B, C, whatever, and you know what you're getting into. So you don't have that. So, and then in that scenario to get into companies which every 7-8 months you hear of some corporate governance issues hitting you from somewhere. So in fact, for the longest time, the only stock I recommended in that was Godrej Properties, which has fortunately run up in the last 2 years. But other than that, I've not really honestly wanted to buy anything in that space, simply because I think I find it very difficult to understand.
Okay, and what about you, Samir? Is there anything you like in the real estate space, or would you also stay away from this space?
So I would like to stay away because the commercial monetization is already out of system for major players who were already there. Now Prestige is left to a certain extent. Otherwise, if you see the residential, I think a lot of negative impact will kick in now. Because see, even again I'm saying that rate cuts couldn't clear the inventory what they have. How will a rate pause or a rate hike will do that? So systematically now it will go down only, because the moment the rate hike starts, the property prices and everything just comes down, because that puts a pressure on every new single buyer.
Okay.
So I feel a negative towards the whole sector. That's it.
Okay, so that's the view that's coming in on real estate space and DLF. Not the most optimistic view, but Mr. Chokkalingam says that DLF is the only one that he would recommend for a long-term view. So that's the view that we're getting in. With that, it's a wrap on today's Hot Money. Mr. Chokkalingam, Sharmila and Samir, thank you so much for joining me on the show. Ask BQ comes up next. Stay tuned to Bloomberg Quint.